Okay, let's dive in. We're looking at a really fascinating intersection today. Cryptocurrency and its impact on the stock market. Two huge worlds colliding.
Absolutely. It generates so much buzz, so much volatility, and honestly, quite a bit of confusion sometimes.
Right.
So the source material you've brought us looks like a great way to try and cut through some of that noise.
Exactly. That's the mission for this deep dive.
Mm.
Go through these sources you shared, pull out the key insights, the stuff that really
Pick
matters.
the crucial context.
Yeah, and figure out what it all means for you listening in so you can get up to speed quickly and, properly.
And this source is helpful because it doesn't just talk theory, it gives some history, but crucially, it points to specific, kind of tangible footprints of crypto's effect on traditional markets.
Okay, let's unpack this then. The core question right off the bat,
Okay.
and maybe the most surprising thing from the source, is about the overall direct impact. How much does crypto actually move the stock market day to day?
And the source is pretty clear on this. While crypto is always in the headlines, for big price swings, potential disruption,
Right.
the overall direct correlation between things like Bitcoin or Ethereum and the wider stock market, it's actually been surprisingly limited, so far at least.
Limited.
Ah,
It feels a bit counterintuitive, doesn't it, given all the attention? So, okay, take Bitcoin, the biggest one. The source says the direct link is weak.
the direct link, yeah, that's what's noted as limited. But here's the interesting nuance the source brings up. Bitcoin's price movements have seemed to affect investor sentiment in stocks sometimes.
Ah, okay. Sentiment. So like psychological spillover. Give us an example from the source.
Well, the classic one they mention is back in December 2017, Bitcoin went on that incredible run, almost hit $20,000.
I remember that.
Right. And the source notes there was speculation then that some investors were actually selling stocks to pile into Bitcoin, chasing that rally.
Okay, so not a direct market force, but changing where people put their money based on excitement or fear. What about the flip side, like a crash?
Yeah, the source gives the counterexample. March 2020, right at the start of the COVID panic, global stock markets were plummeting.
Yeah, everything went down.
And Bitcoin took a massive dive too. So that suggests, maybe some level of connection during moments of extreme market stress, even if the day-to-day correlation isn't strong.
Interesting. So it's less about Bitcoin predicting stock moves and more about them maybe sharing the same boat during big waves of panic or maybe euphoria, at least historically.
That seems to be the picture painted by the source, yes.
Okay, what about Ethereum, number 2? Is it the same story?
Actually, the source notes that Ethereum's direct link to stock market moves has been even less pronounced than Bitcoin's.
Even less. Wow, okay.
Yeah.
So from just looking at the prices, neither seems to be a primary driver for the stock market
Yeah.
yet. But Ethereum is different, right? It's got the whole technology angle, blockchain. Does that have an impact the source talks about?
Oh, absolutely. And this is where the source suggests things get really interesting for the long term. It emphasizes that Ethereum's importance isn't just its coin price, it's the foundation for so much blockchain innovation.
Right, the platform itself.
Exactly. And that underlying technology, the source argues, has huge potential to disrupt traditional finance.
Disrupting finance.
Yeah.
Well, that sounds like it would eventually hit stocks, especially bank stocks, financial sector stocks.
Precisely. And then there's the whole DeFi thing, decentralized finance, mostly built on Ethereum.
Right.
The source connects the growth of DeFi, these financial apps running without the usual banks or brokers, to potential stock market effects. As DeFi expands, it could drive investment into companies building that infrastructure.
Tech providers, maybe?
Yeah, tech providers, companies involved in that ecosystem. That investment would show up in stock prices. So the source suggests the tech and the ecosystem around it might be bigger stock market factors long-term than just the crypto prices themselves.
That makes a lot of sense. It's the plumbing, the potential shift in how things work,
Yeah.
not just the token price.
Okay, so if direct price correlation isn't the main story right now, where else is crypto leaving its mark, according to these sources? What are these specific notable footprints they mentioned?
Okay, footprint number 1 the source identifies is definitely increased market volatility.
Ah, yes, the wild swings.
Exactly. Crypto's known for it, right? And the source says that high volatility can sometimes spill over, contributing to choppiness in the stock market too.
And does the source say why crypto is so volatile? I mean, beyond just being new.
It points to a few key things.
Yeah.
One is the lack of regulation compared to stocks. Another is the difficulty in valuing them.
Yeah.
There aren't really fundamental metrics like company earnings.
Right, no PE ratios for Bitcoin.
Exactly. And it also mentions susceptibility to market manipulation. All that together fuels these big, sudden price moves. And the source is pretty clear. This isn't just about individual gamblers winning or losing, right? This volatility, it says, offers potential high returns, sure, but it also poses risks to the stability of the whole financial system.
That's a crucial point it makes, yes. It's a potential systemic issue, not just isolated speculation.
Okay, volatility. Got it. What's another major footprint?
Increased investment opportunities. That's the second big one. Crypto has genuinely created new ways for people to invest, maybe diversify, or chase higher returns than they see in traditional markets.
And it's not just buying Bitcoin on an app anymore, is it? The source lists different ways to get exposure.
Correct. Direct ownership is one way, obviously. Buy Bitcoin, buy Ethereum. But the source also highlights investing in the companies involved in crypto. Like the exchanges where you trade crypto, or the companies that mine it, or firms providing the blockchain tech itself. Those are often publicly listed stocks.
Okay. And the DeFi angle we talked about.
Yeah, investing in projects or companies tied to DeFi is another route the source mentions. And importantly, it points to new financial products that give you exposure without actually holding the crypto.
Ah, like futures, or those ETFs everyone talks about.
Exactly. Futures contracts, and especially exchange-traded funds, ETFs. The source sees these as pretty significant.
Why significant?
Because they offer a way in that's more familiar, often more accessible, and crucially more regulated for many investors. You're using the existing stock market infrastructure.
That regulated part feels key. It maybe brings in people who are nervous about the sort of Wild West nature of direct crypto buying.
It definitely lowers the barrier and integrates crypto more into the traditional financial world, operating within those established rules.
Okay, so volatility, new ways to invest. That connects to the third footprint, doesn't it? The rise of blockchain technology itself. You mentioned it with Ethereum, but the source treats blockchain as its own big impact area.
It does, yeah. And it defines it simply, basically, a distributed ledger. Think of it like a shared, secure database spread across lots of computers.
And the key is it's decentralized. No single boss.
Exactly. No middleman needed, like a bank, to approve things. That's the core idea. Secure, transparent, no single point of failure.
And the source stresses this tech goes way beyond just crypto.
Way beyond. Especially in finance. The source lists potential uses like streamlining how trades are settled, clearing payments, making cross-border transactions faster and cheaper.
Stuff that banks and clearinghouses do now, but maybe slower and more expensively.
That's the potential disruption, reducing the need for some of those traditional intermediaries. The source suggests that as companies adopt blockchain for these efficiency gains, it could create whole new business models.
And the early adopters could get a real advantage.
Significant gains, potentially, yeah.
So, blockchain. Not just crypto's engine, but a potential game changer for companies on the stock market. Okay, opportunities, tech. But we have to talk risks. Footprints 4 and 5 in the source seem to bundle the dangers together.
They really do. The source dives into the risks around all the hype and speculation.
Yeah, you can't miss that.
Right. All that excitement can fuel, irrational buying, push prices way too high, and then people get burned when corrections happen, or if they bought into really risky, flimsy projects.
And the source ties this risk directly back to something you mentioned earlier, the lack of regulation.
Absolutely. It explicitly states that the lack of comprehensive rules makes it much harder for investors to properly judge the risks compared to, say, buying a stock or a bond where there's tons of disclosure and oversight.
And that murky environment.
It's also good for scammers, unfortunately.
That's another major risk the source flags. Fraud, scams, they thrive where oversight is weak. It makes it really tough to make informed, safe decisions, which leads right into the fifth footprint, which seems to underlie a lot of this. Regulatory uncertainty.
Yeah.
Just not knowing what the rules are or will be.
Yeah, the source calls this a huge challenge. Cryptocurrencies just don't fit neatly into the old boxes for stocks or commodities or currencies. So regulators are scrambling, and that lack of clarity creates uncertainty for everyone.
And it's not just hard for investors figuring out risks, is it? It must be tough for the companies in the crypto space, too.
Definitely. They face headaches trying to comply with patchwork rules, plus the constant risk that a new regulation could just pop up and change everything for their business.
And does that uncertainty affect bigger players getting involved?
The source says yes. It's a key reason why big institutional investors, pension funds, big asset managers, have been hesitant to really jump in with both feet. That uncertainty potentially slows down the whole market's development and acceptance.
Okay, so it's definitely a complex picture. If you had to summarize the source's big takeaway on crypto's impact on stocks right now, what would it be?
I think the main conclusion is that even though that direct price link seems limited for now, crypto has undeniably made a significant mark on the stock market world.
How so?
It's brought both new investment avenues, new opportunities, but also significantly heightened volatility and a whole new set of risks.
So definitely not just a fad. It's actively reshaping things, but it comes with major warnings.
Exactly. The source really stresses that. The risks volatility, the regulatory gaps, the potential for scams, they're very real. But so are the opportunities for people who do their homework, understand the risks, and, invest carefully. It's not a place to just blindly jump in.
And what about the future view from the source, especially on blockchain?
It suggests that as blockchain tech gets more mainstream, more understood beyond just crypto, we'll likely see more traditional companies adopting it.
For those efficiency gains you mentioned.
Right, for efficiency, for security, and that wider adoption could actually end up having a more profound, long-lasting impact on the stock market than maybe the daily price swings of Bitcoin.
That's a really important distinction. The tech versus the token price. And the final advice from the source for anyone listening who's thinking about this space.
Basically, weigh the potential upsides against those risks very carefully and do it based on your own personal situation, your tolerance for risk, your financial goals. It really comes down to informed decisions.
That's a fantastic wrap-up of what the source material suggests. Thanks for walking us through that. It's clear the impact is, well, it's complicated.
Yeah.
Less direct price linkage than maybe expected, but big effects from volatility, new investment types, the sheer disruptive potential of blockchain.
Yeah.
All playing out against this backdrop of regulatory wait and see.
It really captures that multifaceted relationship well, I think.
It absolutely does. And it leaves us, and you listening, with a pretty big question to chew on, doesn't it? Given how fast regulation seems to be evolving now,
Sure.
and how quickly this blockchain tech keeps advancing things, the source highlights,
Yeah.
how might that balance shift? The balance between the risks we talked about, the volatility, the speculation, the uncertainty, and the opportunities, the new investments, the blockchain adoption. How might that change in the next few years? And what could that ultimately mean for the whole financial system that the source touches on?
Definitely a dynamic space. Lots to watch.
Indeed. Well, thank you for bringing these sources and digging into this with us.
My pleasure. Always interesting.
And thank you for joining this deep dive. Keep digging into the topics that interest you and keep asking those questions.